We are back, wrapping up another day in the markets. Things are a little flat out there. We have the minutes from the FOMC meeting in July that we'll be discussing, looking at the continued bleeding of altcoins in the crypto market. All of that and more today on Money Never Sleeps. God, it gets me pumped every time. Thank you, everybody, for joining us live once again today. I hope you enjoyed yesterday's video. Before we get going, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We're not financial advisors. We're a few guys who love following the markets. So please do your own research before making any buys or sells. Good morning, Randy. Good morning, Mr. House. Most importantly, good morning, Kevin. How are we feeling on this Wednesday?
I'm doing great, man. What a fun 24 hours it's been. Seems like, a lot of the things we sometimes talk about on the show come true, which is it's a good thing that happens, right? Because at least we're getting ahead of the news, at least ahead of the markets itself sometimes. So yeah, this has been a fun few, not few, maybe 2 days or so. It's been fun for alts, right? We've seen some move to the downside. TradFi has definitely been reacting pretty negatively, but once again, we haven't seen pure capitulation. So we still got a lot of fun ahead of us. How are you doing today?
I'm doing pretty good. It's been kind of boring today. I'd say crypto had a little bit moved down earlier. That's where I've been paying attention. TradFi has been pretty flat overall. We're seeing a little bit of increase in volatility. I want to get into the July FOMC minutes here in a moment, but before we do that, I don't think there's too much else. Give me 1 second here. I'm going to have you vamp for a second, so I have to sneeze because I am still sick.
No worries. That's a hell of a sneeze, I think that's you and I both agree that it's good to sneeze sometimes. And then once you unmute, you can go right back to the markets. I didn't know what the fuck to say.
Yeah, we'll work on your vamping abilities there and just kind of improving it a little bit, but that's all good. So let's start with the FOMC minutes. That's what the markets were looking at. We saw a bit of positive reaction initially to those minutes. I'll kind of I read through it. One thing I'll say, I probably just should have put it in ChatGPT and gotten it to make it a little bit less nauseating to read. But at the same time, I want to make sure that we're getting as much quality from it as possible. But goddamn, there's so much filler in there. That shit is way too long. They could cut out half of the crap, half of the repetition, half of the verbiage, and just make it easier to bullet point and understand. But here's some of my takeaways initially. A big focus of it that I saw was around credit tightening, and especially as it relates to commercial real estate. We saw that credit availability for businesses is tightening, and the main reason is that the banks have a negative economic outlook. I don't care whether or not, we can argue if you should trust the government. I personally don't really. And I'm not going to say you should trust the banks, but I will say that the banks are the people who make these decisions with the banks are pretty damn smart, and they're going to act in their best interest. And if they see further deterioration of economic conditions, I'm gonna side with them over your slapdick YouTube, Twitter influencers who are going to tell you that everything is sunshine and rainbows and want to pump their bags to kingdom come, because those people don't know fuck all. And the people who are running the banks and who are doing this, it's called the SLOOS, the Senior Loan Officer Opinion Survey. The people who they're surveying here, I would trust their take on the economy before any of these YouTube influencers. So I think that's one check in the box toward continuing to be cautious about the state of the markets.
Yeah, absolutely. I mean, have you ever seen the movie Margin Call? That's a cutthroat fucking movie. And if you see how much they sell off within, probably a 12-hour period, I would trust the banks, I think, a little bit more in terms of not necessarily trust them, but if you see what they're doing, watching the money, what, their moves that they're making, that's probably a good indicator of the direction of the market.
Yeah, they also in that survey discussed that they're going to have more tightening in the back half of the year as it relates to commercial real estate. And banks are citing concerns around the credit quality of commercial real estate and other loans as a reason to tighten further throughout the year. So it's going to be harder for businesses to get money. They did say that it's still, they're still giving mortgages out to high credit individuals. The price around those mortgages, was discussed. And one thing that was interesting was it cited the fact that it feels like the impact that interest rate hikes have had on the real estate market so far have kind of topped off. Meanwhile, prices are still going up. Demand is still high, but the supply is not there. And so it's a really sticky time, like we've discussed previously, in the real estate market. There's also some good amount of discussion around consumer spending, as it's been showing to be very strong. We had those numbers yesterday that came out, 0.7% month over month increase in consumer spending. A good amount of it was discretionary as well. And, that's being attributed to houses continuing to have strong balance sheets. The amount of, wage gains has outpaced inflation over the last few months. The wage gains are still down from this time last year. And with unemployment being so low, it's not that hard for people to find jobs. So it still feels like, while the Fed has stated that, the unemployment reports may not be as important, it still goes hand in hand, right? Like, we're going to continue to see inflation be really at this like sticking point while the uninflation rate is so high.
Yeah, absolutely. Again, I think unemployment is something that we're going to see be an issue later on. This inflation level where we're currently at. And again, this is why, before you and I were talking on the show, we were talking about September and, the FOMC, what they're possibly going to do. I think you're right. I agree 100%. If we get another sticky couple of data readings, whether it's PCE or CPI, I mean, that's just going to kind of give us a direction of what's really going to happen, right? I think that we're going to see something sticky considering how bad August has been for a lot of energy costs, right? Again, CPI is really interesting because they could always substitute those basket of goods and manipulate the data in any way that they see, they choose to, which they've definitely done in the past. They've changed calculations. But for the most part, I think that we are in a place where this inflation is not getting down fast enough. I think we saw some Fed members talk about that as well. And if it remains persistent at this level while rates are extremely high, then I think there's only a few things that can really be done, right? Either we give up or we start raising rates higher again, which in turn would definitely hurt a lot more than is currently under stress at this time. Whether they say it or not, they talk about banking being resilient. Banking can be resilient now, but if 50 basis points from now, it might not be the same situation, right? So it's really interesting, but it's a place that we're just going to have to see how this plays out. I don't necessarily have a lot of confidence. That might just be my own opinion.
And to your point, Kevin, and the opinion of the participants of the July meeting agree with you, because one of the last sentences from the minute stated, most participants continue to see significant upside risks to inflation, which could require further tightening of monetary policy. So exactly. The people who are already expecting that we've hit the peak rate and they're not going to raise again, I don't know if they're just not paying attention to what the Fed is saying, or they don't believe them, or they don't care. But we are not out of the woods when it comes to interest rate hikes yet, like plain and simple. There's a reason that there's still a probability for it. We now see a 90% chance of a skip in September. I think that's the most likely outcome, unless we get another PCE reading next Friday, the 25th. If that comes in hot for July, we're going to start to see the probability shift a little bit more. If we get another hot CPI reading of August number in September, because I believe that CPI number comes out a week before the FOMC. Like and we'll also get another unemployment reading before that. It's not off the table. Like, we've seen these probabilities move quickly. I mean, back in January, February, we saw the probability go from like no chance of a hike up to, oh shit, they're hiking again. Like, so this can move very fast. And some market participants may be hunkered down on their opinion, but right now, we discussed on the market psychology episode last week, like, you have to be willing to pull holes in your opinion. I'm like constantly trying to do that for us, trying to see where we could be wrong. But the Fed is telling us, like, plain and simple, they're not trying to really like hide anything right now. I don't think they're trying to like trick the markets. I think they want to try to like create as much order as possible. And so I think at some point we just have to fucking listen to them. I want to hear what Jerome Powell has to say on Friday from out in Jackson Hole. We'll discuss that. I mean, God, can you imagine anywhere more perfect to be than up in Jackson Hole with Jay Powell? God, maybe I'll go vacation up there one day for the
It's
Fed
not far.
meeting. That'd sure be something. It's not far from where I am.
Right,
I could just like hop on a little plane and just fly right on up there. Me and Jay, I prefer they did in the winter. Maybe go skiing with Jay Powell. I don't know if he's a skier anymore, but
you'd hang out with
that being a good time.
You'd hang out with Charles Hoskinson too from Cardano. He's I think he's up there in Wyoming too, but they probably aren't friends right now.
Doubt it.
Yeah, no Fed is a friend of Cardano right now.
No, that is all I had on the FOMC minutes. The data that came out this morning wasn't particularly interesting. We're still seeing a lot of, the data was around building starts and building permits, came in mainly in line. We're seeing that people are still wanting to build. People still need new homes. People still need to upgrade. And that's why I continue to say that I'm bullish on Home Depot. Home Depot continuing to show good results. Listen, man, you've been right about a lot of crypto stuff.
Yeah.
I haven't been wrong about Home Depot, and I'm still going to stick to it for the reasons I discussed previously. So they're continuing to perform well. I think they will have a strong, I think they will outperform a lot of what's going to perform better the rest of the year, Home Depot stock or Bitcoin?
Home Depot, 100%. Dude, why do you think I'm wearing the orange today? 100% Home Depot.
All right, so that's really everything I have. Is that Costco, you mean?
No, Home Depot.
Home Depot's hot dogs?
They do. It's like, well, at least here in Chicago, they do. You just, after a hard day of working lumber, get a hot dog. Hits hard.
They have is it inside of Home Depot? Sorry, I'm going to take us off the rails for a second. Inside of Home Depot, or is like a food truck pulls up and they're slinging hot dogs?
So here's the thing. It's like a stand, like a food stand. It looks like a food truck, but without wheels inside the Home Depot as you're walking out. And it's just like Vienna hot dogs. It's just it's a nice little way to end the day, It's definitely yeah, it's pretty cheap too. So not too bad.
They got like Italian beef in there as well. Like I'm just envisioning a bunch of guys getting off their shift, like coming in, getting a hot dog, standing around, the Chicago, how you got to stand to make sure all the stuff falls between, doesn't get on your clothes. Like that's what I'm envisioning here.
That's how you eat it. Yeah, absolutely. Probably, man. I don't hang out with too many people at the hot dog stand at Home Depot. That's to go.
I'm not a Chicago beef, amateur here, man. I've had my fair share of sandwiches over the years. All right. Anyway, let's get back on track for the love of God. What else besides the minutes? What else is really catching your eye today? We're seeing alts continue to bleed. I think we should go in that direction. I had a question for you around technicals and charting because I've been trying to learn a little bit more on that front. Once the time is right, I'll ask that question. But why don't you get into some of the crypto stuff?
Yeah, absolutely. Let's take a look at just take a look at Bitcoin, right? Bitcoin has been very boring recently, but we've seen that alts have been pushing pretty significantly, right? Just pull up Maddox, gonna pull up first, but we're gonna go to Bitcoin. We can see that, my chart has definitely been reduced to just a few lines as opposed to what it once was. That's probably because it's been extremely boring and a lot of things that we were anticipating just haven't happened yet. We're just moving sideways right now, right? But this is a 4-hourly pattern. I don't want to look at that. I want to look at the hourly right now. We can see that on the daily stochastic RSI, we lost the 50 moving average yesterday. We're below it still. We see that there's still room to the downside, right? We're still in the supply zone, which is really wild, meaning that people are still offloading their Bitcoin. I think a lot of people are also just kind of anticipating that Bitcoin's going to move up from here. And again, I think that's a very reasonable assumption. And obviously you guys know that I was kind of bullish on this idea of hitting that 34, 35K level. It's not necessarily a parallel channel that I'm seeing. You could say like right there, but it's a very weird pattern. I don't necessarily like how that looks. So if anything, I think there might be a bit of a squeeze here for Bitcoin, which maybe some of that money from USDT that is currently parked right now, maybe some of this pain, this red that we're seeing in the market subsides, and we start seeing some USDT move into Bitcoin, and that pushes us up. But with the amount of supply that I've seen on Bitcoin recently, where it's just absolutely been getting rejected at 29.5 and below, It tells me that even if we do push up above that 29.5 level, we get close to like 30, 31. Are we going to expect anything different? I honestly believe that we're probably going to see a lot more rejection there. I think it's going to be harder and harder as time passes to get closer to that 34, 35K level. So I'm not necessarily bullish on Bitcoin right now. I'd be more bullish on Home Depot, for that matter of fact. But for Bitcoin right here, I think that this is just, it's probably going to push up. Again, we're in this parallel channel. We got to see if we do find the bottom of this channel here. We find some support. That would be around maybe, I don't know, like 28 to 28.8, somewhere around there. We could potentially hit there in the next few days. And if we do find that as support and it starts to push up, then maybe we do go for this like 30, 31, 32 level around here. Whether we are able to sustain that. Yeah.
Real quick. When you say levels of support, what dictates a level of support for, any token or any charting situation?
Absolutely. So usually when we talk about support, it's levels like this, for example, it's a level that's been tested and it's bounced off and then it's been tested again. It shows that this line right here, there's a pretty good demand zone. And then obviously if we're looking for resistance, it's an area where it's been sold off constantly. So we could look up here, it wicks up and it gets rejected, wicks up, gets rejected. So that would be, places where we're finding levels of resistance, keeps being sold off, which would be a supply zone, and levels where we find demand where the price comes down and people are willing to buy it back up and it shoots up. That would be our support. So that's what I look for when I look for support and resistance. And now here's the funny thing about technical analysis. There's imaginary lines that show that there is demand on some of these channels. And we can kind of see it in here, right? I'm just going to zoom out here. Down here, we found that this held as support. So now this imaginary line, trend line, goes into the next level because we found it as support once again here. And then you can kind of just assume that this is going to be support until it isn't, right? And the same goes for, resistance. Once we test the top, if we do test the top again and it gets rejected, then it's going to be resistance again. But again, support could always break and that becomes resistance, and resistance could always break and become support. It really depends on what the price action is doing, but you can kind of, if you're a swing trader in some aspects, you can potentially, buy at levels of support and then sell at levels of resistance. I think that's what a lot of people on the shorter time frames do. But yeah, so that's pretty much what I use. But I look at this as a macro perspective because, again, we're in a big channel. And if people are trading this on the shorter time frames and looking for this, like on the, say, the 1 minute to 15-minute time frame, they can probably find these patterns and do the same exact thing. I'm looking at this as a macro trade because I do believe that, I don't know, for my own sanity, I'd rather know where the market's going and position myself well as opposed to try and out trade the market on a shorter time frame basis. And right here, okay, I think
that leads into my other question. Sorry to interrupt.
Sure. No, all good.
When looking at Bitcoin, we see that on the daily, it is moving toward oversold. And I think a lot of them have the same pattern right now. On the daily, it's moving toward oversold. On the weekly, it's kind of in the middle, but trending down toward oversold. And then on the monthly, everything is overbought, or at least moving in that direction. When you see that difference there, what is that telling you, and how would that inform your decisions when it comes to whether or not you want to take action with any of these tokens?
Absolutely. So pretty much the stochastic RSI is a momentum oscillator. It's going to tell you the strength behind moves in the market. So when I look at the weekly, this is like, imagine trading long term, right? And if we look at, let's go to something like the 5-minute chart, right? See how it's completely oversold as opposed to where the weekly was coming out of oversold. This is pretty much for traders who are trading on the shorter time frame. So scalpers, day traders, they would look at this as I look at the weekly and say, okay, on the shorter time frame, we're able to hit certain prices within this given range, and I can potentially buy low and sell high here within this range, as opposed to what I personally do, which is looking at the higher time frames, which is the daily, the weekly, stuff like that, and I'm picking my entry points in my exit levels. And using the stochastic RSI tells me the momentum of the move to the upside or to the downside. So you could be on the 5-minute chart, or even let's pull up the 5-minute chart once again. We got this bad thing is right here. We have, I know it's too much of an extreme. We can see that the price is obviously coming down, right? And we're pretty oversold here. So this tells me that there's probably going to be a push to the upside. So maybe you would be here and you'd put in an entry level and push up, and that would just be that trade for the short term. Whereas you do the same thing on the macro, it just is a different time frame because the price does fluctuate on the shorter time frames. And if we look at the macro, obviously we're picking bigger targets. So it just tells you that what people are doing, what the money's doing on the shorter time frames, as opposed to what they're doing on the larger time frames, and seeing where the momentum is. If people are willing to be, if we're overbought on the monthly as opposed to if we're overbought on the 5 minutes, that's definitely going to be for two different types of traders itself.
If you're trading the 5-minute chart, is it mandatory that you have an Adderall prescription?
No, but the 30-second chart 100% is. Listen here, there are definitely scalpers who are doing this stuff, and it's insane. Like, I could never do that. I don't have the balls of steel that I claim to have when I look at the shorter time frame charts. I use those necessarily to see if we're finding, again, once again, support and resistance on some of these levels. But for the most part, I feel safe doing less trades and just picking my levels, a little bit more, I guess, defensively, because you don't want to be caught out in the shorter time frame, and then next thing you know, it just fluctuates too much. I'm going to stick with the longer time frames. I know where the direction of the market. I see that it's completely overbought, so it tells me there's not going to be a lot of movement further up. I think that the volumes have died down significantly, and if I look at this on the daily, it's coming down, so there might be a little bit more room to the downside, and then it's going to push up. You would want to see all these stochastic meters kind of line up if you want to see a pretty significant move down or up. That's going to tell you the strength of the market's next move. So it's kind of like I don't know, kind of like a puzzle. You just got to wait for everything to line up perfectly, and then it gives you the perfect picture of what direction the market's going to take. That's personally how I see it. But again, there's definitely people who are better at this, looking at these smaller time frames and being like, okay, I'm willing to drop this much money and scalp this for, I don't know, 2-3%. That ain't worth it for me personally.
Okay. Let's get back on track. Appreciate you explaining that to us.
Absolutely. So we saw Bitcoin. I think we know that there's a lot of resistance ahead of us. Again, there might be a little bit more downside if we look at the daily, but it seems like there's a lot more resistance ahead. That doesn't mean that Bitcoin dominance isn't going to go up from here, right? We could see that we broke from this parallel channel to the downside. This is, in my opinion, a bull flag. We broke from it, clearly we did, and we broke above the 50 moving average on the daily, and we found some support on it. We bounced off of it, bounced up. We got a little bit of a wick down earlier. I think that was because we saw a bit of a sell-off. Also, we just see that in general, a lot of money moved into USDT, but we pushed up again, and we're in this place where the daily stochastic RSI is, not oversold, but it's heading in that direction. Price is going up. I think that we're going to start seeing a lot of these lineups to a point where we're going to start seeing the momentum push to the upside for Bitcoin. We can see that right here that we bounced off here. Weekly stochastic RSI still has a lot of room to the upside. And we got the 200 EMA that's right here that serves as resistance. I think we're going to break through the 200 EMA. And that would reclaim about 51% of total market cap for Bitcoin. And I think that that's going to set us up perfectly for crossing this 52 level. If we can break the high that we had put in back in June of this year, it was at the week of Monday, the 26th of June, then I think that we're going to be seeing a lot more progression to the upside for Bitcoin dominance. And again, Bitcoin doesn't need to go up in price. We just need to see alts bleed, right? And, a lot of the stable coin dominance needs to go down. Maybe some people just put their money in Bitcoin because they have faith in it. I don't know if that's going to be the case, but I think Bitcoin dominance and USDT dominance are going to be the ones to watch from here. We've seen, a lot of alts. A lot of alts have lost dominance to Bitcoin in the past, 4 weeks since the XRP push, right? For example, let's look at XRP. XRP dominance back on, the week of, July 14th, I believe. That shot up all the way to 4.02% of total market cap. And today we're standing at currently 2.80% market cap, and we're below the 200 EMA on the weekly. That just tells me that, a lot of these alts are losing that dominance that they quickly pushed up in. A lot of liquidity came in. A lot of it's, slowly bleeding out. And that's going to be good for Bitcoin dominance in the long term, which if that's good for Bitcoin dominance, then that's going to be terrible for altcoins, right? So let's
I just looked it up real quick, and the stablecoin dominance between USDT and USDC is up 13% since the XRP day. Like, if we look at it from where those dominance numbers bottomed out, when everyone was rushing into to alts to where it is now. So that number has moved up higher than anything else in that time, obviously, and even greater than the losses in a lot of the other crypto tokens.
Exactly, right? And that's not necessarily a good thing to see. And here we are once again looking at total 3, and it's on the weekly, but let's look at the daily, because this is another thing that we were keeping an eye on. We're seeing repeated closes below the 200 EMA, and now we broke out of this parallel channel that was on the smaller time frames, and it looks like we have some momentum to the downside. We've closed twice now in the red underneath this parallel channel, so that means we're probably going to break from this And if we're looking at this on the weekly, if we just go back to that, we can see that means it's another it's not likely that we're going to see money flow in and push up above this 200 EMA to save this death cross from happening. It kind of just accelerates the decrease of the 50 moving average closer to that 200. And that means that alts are probably going to bleed further. And again, the only reason I keep bringing this up is because I see a lot of people talking about, maybe there's an alt season coming in 2024. I think you need to pretty much preserve capital right here. For me, that's what I'm doing. I'm preserving capital. I can't tell you what to do, but it just seems like if we know that alts are possibly going to drop a significant amount, if this parallel channel does hold, we do to get this death cross, and we don't even have enough strength to test this top part of the channel near $375 billion. That tells me likely that we're going to see more of the money fade from this entire market cap than we are going to see it flow into. And I've been saying it, I think we'll be under 300 billion in total market cap for total 3 fairly soon, maybe in the next few months. What catalyst? I have no idea, but we can see that alts are bleeding pretty substantially recently. And even when we get bullish news for Bitcoin, like Coinbase having Bitcoin futures now, market's not really reacting in a positive way. So we need to keep that in mind. We have to follow the money and not the narrative sometimes. And we can see that the money's flowing out of these markets, and that should be, for how much it's actually flat out so far, it should be a warning, I feel, for most people to realize, like, hey, something's happening here. We need to keep an eye on this. And if we just let this happen, we could be here 2 months from now sitting at $295 billion for total market cap, and people are still holding alts. So I'm not telling you what to do at all, but people should definitely have an idea of where this money's going. It's not going in, it's coming out.
Yeah. All good news. All good news lately has just been an opportunity to sell. Before we wrap it up, one final chart I want to look at and have you pull up would be the S&P. I believe it closed yesterday under like a pretty key level of support. We see this is one of those charts where on the daily it is very oversold, but on the monthly it's still very overbought. So kind of an inflection point there. What do we see, with the moving averages on the S&P chart right now?
Absolutely. If we're looking at the monthly for the moving averages, obviously it's a lot lower. We're looking at probably that 3820 level. We see that we're getting rejected off this trend line. I would show this a few days ago with the NASDAQ and the Dow. Every time it gets to this, it gets rejected. So I would assume that if we do come down and we try and find, retest this level, it would get rejected once again. There's only so many times you can get rejected, and especially on this monthly time frame. So we need to keep an eye on that. The more rejections that happen, that usually tells us that there's not enough strength to push through. We see that we got rejected here on the weekly, and the weekly does look like it has some room to come down. Question is that a significant move down, since we have the stochastic RSI already coming down fairly fast? Usually if this comes down fairly fast without a lot of price movement to the downside, it shows you that the strength of the movement is not significant or not as strong as people would like to see. I mean, let's go up here to where we are currently. We're down about 4.3%. It's pretty, that's nothing to scoff at, right? That's a pretty good move down from where we were. We were at what was the height of this thing? 4607. We're at 4408 right now. So we'll see how this plays out on the weekly. Obviously, the weekly's going to close Friday. We still have plenty of time. I'd be interested in see if we can get a little bit of a further push down going into Friday. That might be a nice indicator that this is still has a lot of room to the downside on this weekly. And then, once we're oversold, we can look for a little bit of a bounce. And again, we have to see if that bounce to the upside, if this stochastic RSI meter starts to look like it's moving pretty fast to the upside. But we also have to keep in mind that this could stay oversold if something bad were to happen too. So we'll just keep in mind how this is going to be playing with price action, the moving averages. On the daily, we can see that we are oversold. We're testing that 50 moving average, and we're currently closing below it. So I wouldn't be surprised if we get it maybe 1 or 2 more days. We stay oversold. Maybe we test this area around here, or we just kind of go sideways along the 50 moving average. If we do get something crazy where we just lose the 50 moving average, obviously we're going to come down pretty significantly and try and find some support. We could look at price for that. We can look at the moving averages. The 200 EMA might be a good level of support. Seems like it's lining up as a pretty good level of support here with some current previous price action. So we'll just have to see how these two play out. But right now it seems like we're on a bit of a downward trend. I think this is the thing that really people do make a mistake on. When we're putting in, I'm going to go into the weekly real quick and talk about this before we wrap up. People honestly, we want to anticipate that everything is great in the market, right? And I think perspective is one of the most important things that we could possibly have. When we're looking at this chart on the S&P, I think a lot of people are thinking that, we put in a little bit of a correction and now we're going to keep pushing up. However, sometimes that's not what we're anticipating happens. I think if anything, this could be I'm going to pull this up because I saw someone on Twitter pull it up today talking about wave twos being extremely dangerous. And he's probably more bearish than me. I said ABC correction. This could be a 5-wave move to the downside, but a wave two would pretty much mean we bottom out at that wave one and then we go up for a wave two correction, meaning we start buying back some of the market before the market turns down again, right? So that would be wave three, wave four, wave five. I messed that up. We go wave three down there. We do like wave four, can't cross wave one. And then we do wave five somewhere lower. This is just a wave count scenario. But a lot of people get bullish right here thinking that we're actually in something probably to the upside, right? That we're going to break through this because we've already put in that correction. Now we're in a new bull market. But this deception of not knowing how these wave counts work could absolutely just hurt people buying here into resistance. And we could honestly see something of this nature, or we just see a massive move to the downside because that's the wave count, right? That we're actually put in the correction, but this entire structure itself could be impulsive to the downside where, okay, we're not in a bear and we're not in a bull market. We're actually in a pretty severe bear market, and we have to see how this plays out. Like, I'm not saying this is going to be a 5-wave move to the downside, but we need to be careful when we look at corrective patterns and what we understand as corrective patterns. I think that what we've put in since the bottom of October of 2022 to where we currently are has been one huge corrective pattern. And what signifies that to me is the fact that we weren't able to break above the all-time highs. We were calling for it. We didn't break above it. And I think that's showing me that, okay, maybe this is just one corrective pattern that's going to have to play out. And we made our move to the upside. And after we go up, we have to go down. And naturally, I think that we could be in a position where this could drop pretty significantly. And that's just based off of looking at the monthly, thinking about how people are buying into resistance here. I think that we are due for a correction, as we're due in previous markets too, right? I I could pull this up. Let's go to the weekly on some of these, and then we'll wrap up. Let's go to 2008. Yeah.
Okay, wrap that up real quick. Then I have one final thing I want to show you, just more because it's funny than anything else.
Absolutely. So, we could be like right here, right? Let's say this is the height of the bull market. And let me grab one of these. No, I want one of these. Let's make this up like this. And we could say, okay, this was the height of the bull market on the weekly. We came down. That's our corrective pattern. Now we're going to go into a new bull market, right? Because we did the same thing back here. However, we're not anticipating that this is a corrective pattern. This corrective pattern that we were anticipating is actually an impulsive pattern to the downside. And we could end up with something absolutely like this. And I think a lot of that is just people expecting, maybe euphoria. People are expecting that we're in a bull market forever. They just don't have the guts to accept that sometimes things are worse than they appear. Technical analysis and everything, you need to have that macro perspective and understand that markets can turn 100% and fool you. And what you see right now could be, 3-4 months from now, a completely different pattern than what we're seeing from what we're currently seeing. So you need to be careful. I think a lot of people are getting caught out here thinking this is going up. Resistance is going to be important, and it tells me that if we continue to push down here, then we're probably going to put in something pretty big for S&P and other indices that are due for pretty significant correction down.
All right, so I want you to pull up. Have you heard of VinFast Auto, the Vietnamese EV maker? And VFS is the ticker. Yeah.
Wonderful. Look at that. Yeah. Let me go to the
daily. Go to the daily. Go to the daily on this thing. This chart is a flat line for years, and then there was some news out about it, and now it has
I didn't even see that there.
Higher.
Look at that.
It's been out since 2021. It has a market cap now that is higher than GM and Ford. What is because they're an EV maker.
VinFast, they get a contract or something?
This chart is so ridiculous. I have no idea. They're like the newest. Remember when Rivian became the sweetheart of EVs and that stock took off and then it's absolutely eating shit? This is like right along the same lines. It's crazy looking at this chart.
Oh man, why do people do this to themselves? I don't know, man.
I was looking at Tesla and seeing how low that's continuing to go, and how it's down another like 2% today. And there's a headline about this one. I looked at it and I just had to laugh and wanted to end this show on a bit of a funnier note.
Yeah, I mean, Tesla's a perfect example of that, right? People were expecting Tesla to go to the moon. You found resistance, and you already created pretty much the structure to go down. Maybe you have a bit of a correction here, but that wave one is pretty much done, in my opinion, when I look at this. Hit that 200 EMA, you're going to bounce from there. But yeah, I mean, that chart was wild from VinFast Auto. I just want to pull up Tesla again because that added to the S&P chart point. But yeah, I think we're putting in a lot of corrective patterns. Again, watch out for liquidation events. I guess VinFast was one big squeeze. I don't think anyone even knew what that was until recently, right? I've never heard of it in my life. But clearly there's money to be made in this market if you're ballsy enough to drop a ton of money
And
into
you got insider
VinFast.
information.
That also helps
Yeah.
sometimes. But we're
This
outsider
is
trading,
this is
so we don't
why,
know.
yeah, one of us needs to get political office so we can start, trading that inside info.
I'm not saying anything recorded on the computer. I'm trying to enjoy my millions when I make them.
Amen,
Not
brother. All right, that's gonna wrap it up.
up.
That's gonna wrap it up for today. Appreciate everybody for being here. Fun one as per usual. We'll be back tomorrow at our regular time, same place. Going to be discussing whatever is going on in the markets ahead of Powell's talk on Friday. That'll be the main event to wrap up the week. But hope everyone has a great rest of your day. Stay safe out there. If you have not yet, like, subscribe, comment, share us out, all of those things. We see all the tweets about it on social from Randy, Mr. House, Payne, Ace, Chris, all you guys. V squared. We appreciate it. Thank you so much. Have an awesome day. We'll see you guys next time.
Take care, everyone.